Hi, my name is Melissa Fradenburg, Financial Advisor with Pearl Planning here in Grosse Pointe. Thank you for tuning in for my webinar, Economic Outlook and Policy for COVID-19. Today we are going to discuss both where we are in the current market cycle as well as put it in perspective with previous bear markets we've experienced, as well as talk specifically about the fiscal policy of the CARES Act and touching really on how it relates to small business relief. So if you are a small business owner or a 1099 employee who is looking at either the economic injury disaster loans or the Paycheck Protection Program loan guarantee, I hope that you find this extremely informative. We are in an unprecedented global pandemic right now. If you watch the news, read any articles, or scroll Facebook, you know that things are very uncertain and quite frankly scary right now. And I struggled to put this presentation together because I didn't want to just dump more negativity on those who are listening. And if you look at some of the numbers and the projections for our economy, it is not looking pretty. However, if putting it in perspective to previous bear markets that we've experienced in recent times, as well as talking about the unprecedented size of the CARES Act and the monetary policy that our government has recently signed, I hope that you leave here with some hope as well as perspective on where we're going. Before I begin getting into the economics and the policy, I want to share with you a quick story about how I got involved in this industry or became a financial advisor, if you will. So I was an economics major in college, and I was always fascinated with finance and really thought I was going to be helping people live their dream and get rich at the wise old age of 21. And when I graduated, I got my securities license right away. However, my first job was not exactly what I had in mind. I basically sat in an area referred to as the bullpen, where I would call my parents' friends and my college friends' parents and try and sell them investment products that I barely understood myself. So I ended up just staying there for a few months to get my securities licenses, and then I moved back home and ended up working in the local bagel shop this summer after I graduated from college for a few weeks. In fact, my father got me a great job interview with a friend of his from college who I met maybe the last time I saw him before the interview was age 6. So I called him up and he said, "Can you come in Monday or Tuesday for a job interview? Since I haven't seen you in a while, I have your resume here, but I'd like to meet you in person. And if you can come in first thing in the morning before the market opens, I'd love to have a chat." So this was Thursday, and I said, okay, how about Tuesday? Thinking that'll give me some time to figure out what exactly this job interview is for, as well as prepare what I'm going to wear for it, right? And I hung up the phone, and my mom said, I made that hair appointment for you to get your hair highlighted with Andrew. Are you going to just cancel that for your job interview? And I thought about it for a second and I said, well, it is Dad's friend. I'll call him right back. He just gave me the option of Monday or Tuesday. I'll just call him right back and change it to Monday. So that's what I did. And I went in and I interviewed with him for the job, and I loved it. I really wanted to be an internal wholesaler for Oppenheimer funds. Needless to say, the very next day, he lost my resume and I did not end up getting the job. Because that job interview was on September 10th of 2001 in Tower 2 of the World Trade Center. And I was supposed to be there on September 11th of 2001, first thing in the morning to go through security before the market opened. And a hair appointment is what prevented me from being in the World Trade Center, Tower 2, on one of the most life-changing and crazy days in our country. And the reason I bring this up, it's an interesting story, talks about when I got into the business, but most importantly, I want you to remember what you were thinking back then in September of 2001. It was unprecedented. Never before had we had a terrorist attack of that size on our soil, an airplane, several airplanes attacking our country, I remember for weeks after thinking, whenever I saw or heard an airplane in the sky, that it was there to attack us. And the reason I bring up this story is because right now we have never had a time where our economy is shut down and we're told to shelter in place from a virus. And it feels scary. And it feels like something out of a movie. I think the movie's Contagion, right? So if you're feeling like things are never going to return to normal, they're going to be different, just like they didn't really turn back to pre 9/11 times. But we've had this before. And in fact, every time there's a market downturn, we have this feeling like this is unprecedented. It's different this time. So as I go through these numbers and sort of what's going on in our economy because of COVID-19, I want you to keep this story in the back of your head and remember that things will come back. Things will turn around. We may never get back to shaking hands and being in a crowded room, but we will go back to somewhat normalcy. So let's look at where we're at. We have just finished off the longest bull market run in market history. So from March of 2009 through February of this year, 2020, we experienced an unprecedented bull market. And if you look at the time between February 12th and March 11th, in just 19 trading days, we entered a bear market territory, so down 20% or more. And what's unprecedented about this is the speed at which this happened. So it's twice the speed of the second fastest post-war bear market decline, which was in 1929, and 2 weeks faster than the Great Recession back in 08-09. So 19 market sessions to enter bear market. So again, on this chart, we're just looking here at putting it in perspective of the fastest decline to bear market territory here at the top in 2020. And if you look 2 down, the second fastest post-war decline of 1929 in 37 trading days. So this really puts it in perspective. If it feels fast, if it feels like you blinked an eye and the market had changed, it's because it was very fast. And if we look at projections and consensus for GDP for Q2, the numbers do not look good. We have completely shut down our economy in many places because of the coronavirus. And what that's going to do, it looks like we could see GDP down greater than 30% for Q2 year over year. And to give that perspective, the next worst post-war quarter was down negative 10%. So certainly unprecedented. You're going to see headlines and scary data coming out, huge unemployment numbers. We've already seen unprecedented unemployment growth, but keeping in mind that we were at record lows. When I was an economics major, I had learned that 5% or less unemployment was sort of the natural rate of unemployment. So being at 3.5% unemployment is still relatively low, but in the coming weeks, we are going to see headlines that are going to be scary, and we are in unprecedented times of our economy. And if you think about things like sports and entertainment, hotels, transportation spending, housing, realtors can't even show houses right now. So a lot of things are just completely shut down, and that will have an impact on our economy. Our government's response to this event-driven bear market has also been unprecedented. In addition to the monetary policy where the Fed funds rate was cut by 150 basis points to basically zero, and we've seen large-scale asset purchases and lending facilities really meant to inject liquidity in our market, and again, in unprecedented amounts. The balance sheet that our government has taken on in order to help make our markets move smoothly through this unprecedented time has, again, been historical and unprecedented. Now, we've also seen $105 billion in paid leave and unemployment support and $8.5 billion in vaccines, testing, research, and development. That was phase 1 and 2 of the fiscal stimulus response. And on March 27th, the government signed into legislation the Coronavirus Aid, Relief, Economic Securities Act, so the CARES Act as it's been named. So let's take a look at this. Again, unprecedented in size. Not only does this surpass TARP and the Recovery Act, so both two acts in 2008 and 2009 combined, but if you look at the overall cost of per person of $6,401, this is a huge package meant to really help relieve some of the economic shakeout from shutting down our economy for the coronavirus. There's already talks of a phase 4 that would easily put this above as far as terms of percentage of GDP, because if you look at the middle graph here, it is slightly less than the combined percent of GDP for TARP and the 2009 Recovery Act. Not by much. So again, we are looking at unprecedented times, but we're also looking at unprecedented relief for these times. And the next part we're going to go through is highlighting some of the areas that are going to have some of the most impact on us in this fiscal stimulus response. So here are some of the key CARES Act provisions that are going to help us get through these uncertain times. And for this presentation, I'm going to focus on both the rebates, the checks that are going out, the unemployment and the impact that that will have, as well as talk about the small business benefits. But I do want to just highlight a few others here that are worth mentioning for those with student loans. Those federal student loans, payments and interest have been deferred through September 30th, 2020. So it is important if you are on auto pay, you're going to have to call and stop those if you wish to do so. But again, that is available without penalty to offer some relief. Another thing worth mentioning, as a financial advisor, I never like to see people use this, but if you do need access to either your retirement plan with your current employer or an IRA, this act has allowed you to take distributions that are penalty-free, meaning there's no 10% penalty for being under 59.5 for taking money from those plans or your retirement account. However, you have 3 years to replace that money in those retirement accounts, or you will owe income tax on those distributions. So something worth noting. And also, if you are currently taking a required minimum distribution from your IRAs, that has been waived for the year for 2020. You can also, if you have already taken part of them, you may be able to return them, but that is something you want to talk to your advisor about or your accountant. So let's look at, again, the ones that I want to focus on here are the recovery rebates, the unemployment benefit provisions, as well as the small business relief. The first one I want to touch on is the rebates. And this is going to have the most impact directly on our economy because it gets money into the hands of citizens, and it's meant to do so quickly. And what this starts out at is for individuals a $1,200 check, for married couples filing jointly $2,400 check, and then for each child under the age of 17, an additional $500. So you see here what that looks like for a married couple filing jointly with 2 children. That is $3,500 right in their pocket. It is important to note that these do phase out. For a married couple filing jointly, it begins to phase out at $150,000. For head of household at $112,500, and for all other filers at $75,000. And that just means that these checks will be reduced for every $1,000 over $150,000 for a married couple. The check would be reduced by $50. So eventually it does phase out. For those high income earners, they are not going to be getting a check at all. However, this is instant relief to those who need it the most. and we don't have an exact date, but the government has said sometime in April, and here we are in April. One thing important to note is that if you recently moved and you don't have direct deposit for your tax return, you want to file Form 8822, which is a change of address, because these checks will be going out to the address the IRS has on file. Or again, if you had an account set up for direct deposit, you would need to also change that account so that your check gets to you in the fastest way. And the next part of the CARES Act that I want to touch on is the pandemic unemployment assistance. So what the act has said is there's an extra $600 per week, plus extending for 4 months total of unemployment, and also expanding for the self-employed, which in the past, if you are self-employed like a 1099 employee, you were not eligible to collect unemployment. And now through the CARES Act, you are. So that is huge. And if you see here, what it does is it brings up that weekly check to closer to the national average of weekly income of $936 per week, as previous high income earners would receive a maximum of $795 a week. So if you look at the graph here on the right, you see that really helps out, especially those making under 45,000 or less are actually making more collecting unemployment than being employed. And then once you get up to closer to 80, 90, 100,000, you see there is still a gap between remaining employed and collecting unemployment. But again, that additional income on a weekly basis really helps out those who are in a tough place. And also, there's no longer a week waiting period to collect that unemployment, so this relief will get to people right away. The next part of the CARES Act that I want to cover is the business loans for small businesses. There has been $349 billion allocated to offer relief for small business owners. And the main two programs are the Paycheck Protection Program, also known as the PPP loan guarantee, or the Economic Injury Disaster Loans, which have been around through the SBA for some time now, have been expanded to also include not just natural disasters, but COVID-19. So first, let's talk about the Economic Injury Disaster Loans. Those are directly through the SBA at the website www.sba.gov/disaster. They are up to $2 million, 30-year terms, and interest rates are 3.75 for small businesses. And the first payments are deferred for up to a full year from the date of the promissory note. One of the main advantages of this particular loan is that there is a $10,000 emergency grant cash advance that is given within 3 days of applying for the loan online. So I have talked to some business owners who have already received that loan, and that is just a great way to get immediate cash in the hands of business owners. Also, this has been expanded to include sole proprietors as well as independent contractors. Now, as far as the loan portion, there are provisions within the Economic Injury Disaster Loan that if you are using that money for qualified expenses, then that loan portion will also be forgiven. And that is to include payroll, maintaining payroll, increased costs due to supply chain disruption, mortgage or lease payments, or repaying obligations that cannot be met due to revenue loss. So again, while this is a loan, a large portion of this may be forgiven if used on those qualifying expenses. So this is a great option, and it does offer rather quick relief in that form of the $10,000 in emergency grant cash. There are no loan fees, no guarantee fees, and no prepayment fees, which means if you apply for the loan and then you decide that you don't need that amount, you can pay it back prior to the term of the loan being up without any additional fees or prepayment penalties. Now let's talk about the difference with that as well as the Paycheck Protection Loan Guarantee. That is through an SBA approved lender. And I would start with your current bank where you do your business banking and go from there. If they are not on that list, you may go to the website. There is a list of SBA approved lenders on there. And if you're looking at this particular loan right now, and do check with the Treasury because things have been changing since this was passed into legislation. There's been various amounts posted as far as the interest rate, but currently right now, the interest rate on the Paycheck Protection loan is 1%, and the loan term is 2 years. Again, this is through SBA approved lenders, not directly through the website. And the amount of the loan is based on your payroll costs. So they will do 2.5 times your average monthly payroll cost. And that is calculated as far as what they include in payroll. It includes salary, wages, commission, payment of vacation, sick, parental family medical leave payment of retirement contributions, group health coverage premiums, and state and local taxes assessed on payroll. It does not include payroll costs for those making more than $100,000. So in that particular case, the first $100,000 is considered, and anything excess is not considered for determining the average monthly payroll costs. So again, when figuring this out, how much loan you will be approved for, there are calculators on a lot of these sites, as well as the U.S. Chamber of Commerce is a great site to get some resources on this, and they will actually give you a calculator to figure out how much you could be approved for. Now, just as that grant through the EIDL loan, part or all of this loan may be forgiven, and it's also not counted as income to you if it is spent on payroll costs, rent, and a lease in force prior to February 15th of 2020, electricity, gas, water, transportation, telephone, internet access, or health care costs over the 8-week period immediately after the loan is approved. So that means if you are using this money for qualified expenses, that amount of the loan will be forgiven. Anything not forgiven, again, the interest rate is 1%. So a great option for those small business owners who are feeling the effects of the coronavirus and or any shelter in place orders by the state that is preventing them from conducting business. So the best resource, again, is SBA.gov, also the U.S. Chamber of Commerce, or your current lender. Even if they're not on the approved list, they can probably lead you in the right direction, but certainly worth looking at for both small business owners, and it's been extended to include sole proprietors and independent contractors. So do look into that if you are feeling the effects, even as, again, a realtor who's 1099 would potentially qualify for this, or somebody who is self-employed and doing contract work that is feeling the burden of this. This is the way that the government is getting money directly into the hands of those who need it most, and certainly apply and look at your options. In closing here, I just want to thank you for joining me for this webinar. I hope that you found it informative. And I want to remind you that while we are in unprecedented times dealing with the coronavirus and the economic downfall as a result of the shutdown, that we have seen things before that are scary and unprecedented, and we've had bear market cycles that seemed they were different and that we were never going to recover. It's not a question of if we recover, it's a question of when. And things may not go back exactly as they were prior to this virus outbreak, but we will have a new normal. And how we're going to get there? We need 3 things. We need slowing of the viral spread, evidence that this fiscal and monetary policy is working, and stock market bottoming. And it's nearly impossible to call the bottom of the stock market. We have seen a little bit of a run-up since we entered bear market territory, since this legislation of the CARES Act is put into place on March 27th. However, we do feel it's very possible that we will retest those lows and potentially even have increased lows as we get more economic news from how this is affecting our economy, our GDP, and earnings growth for companies. However, I want to reiterate the fact that in times of volatility, disciplined investment strategy absolutely helps. And regardless of where stocks ultimately find bottom, the current bear market provides tremendous opportunity for long-term patient investors. So don't stop contributing to your retirement plans, your IRAs. You now have until July 15th to contribute to your IRAs or SEP IRAs for 2019. Evaluate your cash needs. Your cash needs have changed since you're not going out to eat, you're not driving to work. You may have more cash on hand. You may want to consider, if you have experienced a reduction in your income for 2020, you may want to even consider a Roth conversion for your IRAs. Do consider that as an option, but also consult with your CPA, your financial advisor, before making any changes there. Another option we're recommending to look into, it's not for everyone, but for certain clients, mortgage refinance may make sense, both as a way just to lock in the low rates, as well as a way to potentially take some cash out if you need more cash on hand during this uncertain time. If you would like to ask me questions regarding this webinar or discuss your personal financial situation, you can reach me at melissa.fradenburg@pearlplan.com or directly by phone at 313-486-9634. Thank you again for joining me, and I hope you're having a great day.